Humans have looked to conquer faraway lands for centuries, dreaming about riches and for better life for themselves. They've crossed oceans, putting everything on the line to chase the high life. Similarly, many auditors look to escape the barren wasteland, which is the audit room, looking for higher living standards, but more importantly, to leave behind the social stigma of being an auditor. A lot of auditors in the Big Four want to join the corporate finance teams in their same firm. I've worked in corporate finance from the start of my career, and a lot of auditors have come up to me and asked me what life is like in corporate finance and how they can make the switch to that department. In this video, I'm going to go over the different moves that auditors make into corporate finance, and I'm going to discuss some of the things that you need to keep in mind if you're looking to make that move as well. The corporate finance department is much smaller than the audit department in terms of staff numbers, and any advertised opportunities are applied for heavily. If you are interested in a career in corporate finance, I'm sure this video will provide you with some valuable information that will help you make that transition. As you can see from the background, I'm in new surroundings as I've moved locations, and this has kept me busy, so I've not been able to upload for a couple of weeks now. Now that I've settled into my new place, I'll get back on that YouTube horse and I'll try and churn out more videos consistently. I've got quite a few different ideas about different video topics, but I want to hear from you on what kind of videos you want to see on this channel. For example, I know a lot of YouTubers do day in the life videos which are really interesting, or even videos about my own career in finance. So let me know in the comments below what kind of videos you want to see on this channel and I'll try and make them. So what are the reasons why auditors want to move across to corporate finance? Some of the auditors that I've spoken to believe that corporate finance roles are more forward-looking and more strategic in nature. They're keen to move into more of a consultant role, being able to influence the decision-making process at their client's firm and also helping them to achieve key business objectives. Their audit background helps them to understand how the finance department functions, but they also want to understand various strategic aspects of the business, and they don't want to focus just on the financial statements. Another piece of feedback which I've got from auditors is the fact that they work on the same clients year in, year out, which can get a bit monotonous. Working in corporate finance, in most cases, you get to work with different clients on deals, so you get the opportunity to interact with different personalities on engagements. The auditors that I've spoken to say that the work gets pretty repetitive, and they believe that there's much more variety in the tasks that you do in corporate finance. And the final reason why auditors want to make the switch in the same Big Four firm is because they believe that a corporate finance role looks much better on their CV. Having such a role opens the door up for more exciting strategic roles in the future, which really can't be accessed directly from audit. You need to keep in mind that corporate finance is a broad umbrella term and that there are several different teams in that department. The corporate finance department is also sometimes labeled as deal advisory or transaction services in some of the Big Four. I'll briefly explain what the different teams in corporate finance do for those people that aren't aware. One of the main teams in the corporate finance division is the M&A team. The team helps clients in the buying and selling of companies, and they provide advice on various different aspects of the transaction. When they're helping to sell a business, they'll source the different buyers, they'll write the information memorandum document, they'll market the business, they'll manage the Q&A process during the deal, and they'll perform various other tasks. When they're helping their clients to buy a company, they look for strategic acquisitions that their client can make, they'll assist in the negotiation process, and they'll provide advice on the valuations, and they'll help their client through the entire deal process. This was just a very high-level overview of what the M&A team does. I'm planning to make a much more detailed video on what they do and why they do it. I've worked in the M&A team for 5 years now, and I can go into a lot more detail, and I think that warrants a video by itself, so subscribe so you don't miss out on that one. Another important team in the corporate finance division is the due diligence team. The team aims to verify the facts that have been stated by the seller in relation to the company which is being sold. They'll deeply investigate various aspects of the company being sold, including its financial accounts, existing contracts, pipeline of work, forecasts, amongst other things. They can also look at the commercial and strategic aspects of the company being sold. The DD team will have great insight into the company being sold, and they'll know its strengths and weaknesses after they perform their work. The team plays a really important part in the transaction. A buyer wants to be confident that what they're paying for, they'll receive after the transaction completes. It's also in the interest of the seller that the team performs their work so that they can get paid a fair value for their business. Another team in the corporate finance division is the valuations team. As the name suggests, they provide advice on the value of businesses being bought and sold. For example, a client might ask the valuations team to work out what the fair price is for a company that is looking to acquire. A client might also receive an offer for its business, and they might ask the valuations team to understand whether the offer is reflective of the market value. The team naturally uses various different methodologies to value businesses, and they also do compliance-related work such as purchase price allocation assignments. Another team within the corporate finance division, which might sit alongside the valuations team, is a modeling team. That team will create a variety of different financial models for different users, for example, for transactions, for investment decisions, for operational decisions such as pricing, etc. The team creates these models and supplies them to their clients, but they don't provide much analysis on the results, unlike the other teams in the corporate finance division who also provide financial models. Let me go over a couple of other teams to round up the coverage of the different teams in corporate finance. The integration services team provides post-merger operational integration advice to clients. So this could mean solving problems such as how to integrate two different IT systems after two companies combine. Another example is being able to integrate two different production processes after one company takes over the other. The final team I want to touch on is the corporate debt team. They'll advise clients on how they can raise debt capital, and they'll guide them throughout the process. They can also advise their clients on how they can refinance or restructure their existing debts. So those were the different teams in the corporate finance division. For auditors looking to move into corporate finance, their easiest transition is into the due diligence team. Of all the individuals I know working in due diligence, a large majority of them started off their careers in audit. Being close to some of the people in the due diligence team in my own firm, I know that when it comes to recruiting, if they can't find someone with a due diligence background, their second choice will always be to pick up someone from the audit team. It's a very popular transition for auditors to make because in both departments you need to have a good understanding of how financial statements are constructed, and in both roles you need to be able to identify financial risk very quickly. When the due diligence team looks to hire someone from the audit department, they know that they'll get someone who's very comfortable reading and using management accounts. They know that they'll get someone who understands how to analyze the financial intricacies of a business. So these are the details such as payment terms, accruals, different contract types, etc. To ensure that the candidate has the technical skills required for the diligence role, they'll recruit an auditor who's qualified as a chartered accountant. I haven't come across anyone as of yet who's made the move from audit to diligence without qualifying as a CA first. One of the most sought after moves for auditors is into the M&A team. Speaking to a few auditor friends of mine, they consider it a fast-paced and exciting environment to work in. Working in audit, they don't really deep dive into the commercial performance of their client's business, and they generally have a focus on the historical performance. They read about the deals that their clients complete, and getting involved in these seems like a much more exciting role for them. The move from audit to the M&A team is definitely possible, and I've seen several people successfully complete it. In fact, my line manager, when I first joined the M&A team in my firm, started off his career in the audit department. Even though it is possible, these moves are quite challenging, and this is because these positions are so in demand. When an opportunity does open up, there are plenty of applications for that single role. Similar to the move to the due diligence team, the transition is normally made after you've qualified as a chartered accountant. In terms of the skills possessed by auditors which can be used in the M&A role, the technical accounting skills are the ones to focus on. As I said before, auditors have an excellent grasp of the financial statements, so when it comes to financial modeling, for example, they can quickly and easily understand the technical nuances in the model. Similarly, when trying to calculate the purchase price through working capital adjustments, auditors can swiftly understand the technicalities. You do need to keep in mind, though, that you don't need very strong technical accounting skills to work in M&A. My M&A team over the years has comprised of individuals from a variety of different backgrounds, including legal, mathematical, and engineering, aside from the obvious accounting and finance. However, having these technical accounting expertise does bring value to the team and allows you to bring something unique to the table. A very common way for someone with an audit background to join the M&A team is to work in the due diligence team for a bit of time before moving across to M&A, so using the DD role as a stepping stone. As I said before, moving into the due diligence team is probably the most common and the easiest way to transition from audit to corporate finance. Being part of the DD team, you get to experience the deal process and you get to understand the workings of a transaction. You begin to think much more commercially than you did in audit, and you start to develop strong analytical skills which are required to work in M&A. Having 2 or 3 years experience working in the DD team puts you in a very good position to apply for an M&A role. Also, working in the DD team, you might also work alongside the M&A team on particular deals, and this means that you can build relationships with senior personnel in that team, which makes the transition a lot smoother. The final couple of moves I want to touch on, I've moved into the valuations team and the operational integration team. In terms of the valuation teams, there aren't many directly overlapping skills which are used in audit as well, aside from maybe general Microsoft Excel skills. There are even fewer skills developed in audit which are directly applicable to the integration team. Saying that, in my firm, there have been individuals who made that transition to these teams from audit. In relation to the valuations team, it's much more common for someone to move across to the due diligence team first and then move across to the valuations team. So that was a roundup of the different moves that auditors can make into corporate finance. And if you want to learn more about different exit options for Big Four employees, click on the video on your screen right now.